Good morning. This is Dylan Jovanet with Behind the Markets. Happy Friday. Today is Friday, August 14th, TGIF. Today, I'd like to talk about something very old fashioned, diamonds. So, a buddy of mine has a son that wants to propose to his sweetheart, wants to get her a ring. And he said to me, I know you're interested in all sorts of markets. Are you interested in diamonds? Do you follow that commodity? And I said, A, it's not a commodity, but I said, I actually haven't looked at diamonds for a couple of years. Let me look into that for a while. He asked me this story. If he's going to take his son to get a diamond for the girl, what kind of leverage does he have when he negotiates with these people? And you know something, I haven't investigated this or looked into diamond prices in a while. Jewelry is of really no interest to me. But I'll tell you, I learned something that I didn't know, and I thought I'd share it with you. So when your grandkids or kids are looking for diamonds, you can give them a piece of advice that might save them $5,000 or $10,000, significant piece of money. Anyway, so our generation, when we were growing up, you remember when you're buying a girl, proposing to your woman, you got to get her diamond. They come up with all these marketing stuff. De Beers, the diamond company, would put all this propaganda in the magazines. How much should you spend on the diamond? What percentage of your salary? And the cut clarity and all that kind of stuff. And, but I didn't know that diamond buying habits have changed a lot since we were kids. That's for sure. Much like alcohol is changing. Diamond prices have actually been crashing over the past 5 years. And I had heard that and I knew it, but I just didn't know how bad it was and how much the industry changed. And I thought it was important for you to know this too. They've crashed about 60% in the past 5 years. In 2022, a natural 1 carat diamond cost near $10,000 to $11,000. Today, 2026, a natural 1 carat diamond costs roughly $4,200. 1 carat diamond, my goodness, that's amazing. So, of course, I pull on the string. Why are diamond prices falling? Well, a lot of them are very simple things that we would know, like lab-grown competition. Man-made diamonds are actually chemically identical, I'm sure you know this, to natural stones, but they cost a fraction of the price, which pulls millions, billions of dollars away from mined diamonds, which, come with all that stuff with the Africa and the violence and all this other stuff. Also, oversupplied China got into the lab mining, man-made diamond market. So, of course, they flooded the world with them. So, basically flooding everywhere. So these basically man-made diamonds, which are chemically identical to natural diamonds, are just cheap and flooding the world everywhere. But also, I didn't know that buyer habits are changing. Younger generations, millennials, Gen Z, they prioritize, of course, value, larger stones, or travel, and all these other kind of hipster experiences that they do over luxury diamonds. They don't view that as that important. I understand. I get it. So, those are some of the ways or the reasons that the diamond business is really changing. It's really interesting. So I pulled the string a little further. Okay, that's interesting. What is the impact when you think of natural versus lab grown? Again, I talked to you about that basically mined diamonds for natural 1 carat diamonds down about 60% in the past 5 years. Like, wow, that's a lot. That's a big drop. Lab grown diamonds, prices have dropped so dramatically that wholesale rates are nearing the basic production floor cost. So, for example, if it cost $1 million to make 10,000 natural lab-grown diamonds, cost $1 million, basically they'll wholesale for like $1,025,000 or $1,050,000. There's no margin in it, wholesale to retail. Now, retailer to consumer, there is still margin in it. And I'll talk about that in a minute. Mine diamonds are down 60%. Lab-grown diamond prices are down 80 to 90%. Wow. This is why Anglo-American has been trying, the big mining company has been trying to sell De Beers for so many years. They own 85% of De Beers, and they're just trying to dump this stake as quickly as they can, and nobody wants to touch it. Nobody wants to touch De Beers. Naturally, when you see carnage like this, I always look for opportunity, right? So I actually started to look, where are the opportunities here? I wouldn't buy Anglo-American for De Beers, but you want to see that sold, but nobody wants to touch that. So I looked at lab-grown diamond companies and I found Adamas One, symbol JEWL, and Brilliant Earth, BRLT. Those are all like trade by appointment, $1 a share. Those are basically bankrupt, or they look bankrupt. I didn't dig into them. Once I saw that they were trading at $1 and it doesn't trade often, I saw that kind of funky looking chart. I was like, okay, these are kind of dead on arrival. But one company that benefits a lot from this, that is still in play, still doing pretty well, is Signet Jewelers. Signet is still going strong, beat forecast. So what does that tell you? Stock is trading at 92, $3 billion market cap, 1.5% yield. Doesn't look cheap. Business is growing, looks fairly valued. So I don't think it's a screaming buy. I wouldn't be chasing Signet. But that tells you that in the war between wholesalers and distributors and retailers, the balance of power has shifted to the retailer here. The retailer is able to buy those diamonds cheap, whether they are actually mined or lab grown, and then add a price to it and then push that out to customers. They got about, generally speaking, about a 20% margin. So bottom line, these companies, there's not really great opportunity here, but what you're seeing shake out here is very, very similar to what happens in every industry. I remember I used to own Gillette razors. I used to own the company Gillette. What a great business. Everybody needs it. They add technology. It's very cheap to make razors. Every year, every couple, 3 years, they come out with the new Mach 3 or Mach 5 or whatever it is. They add a razor, they sharpen a blade. I don't even know if that's real. But what I do know is that they're able to come out with their new technology razor and raise prices above the inflation rate, which is great. But then Walmart became so powerful that Walmart had the pricing power over suppliers like Procter & Gamble and Gillette. What was their competitive response? Procter & Gamble bought Gillette so they could bulk up and push back against Walmart. Walmart said to you, look, we're so big, you're going to sell us razors at $3 a pop, whether you like it or not. If you want to get into Walmart, everybody needs to get into Walmart. Well, what do companies like Procter & Gamble and Gillette do when a retailer gets that powerful is they bulk up and then they push back against the retailer and say, no. We're actually too big for you to push around like that. This is the nature of the evolution of these kinds of things. What I suspect you'll see in the diamond business is massive consolidation after this carnage works out among these lab producers, these lab growers. And you'll see one big behemoth come out, and then it'll start to exert pressure on Signet and the jewelers and all the people capturing economic value now. But we are still innings away from that happening. Anyway, that's all I have for you today. Have a wonderful weekend. I will see you Monday.